And welcome to another episode of Experts Speak. I'm Michael DeLon. Today, I'm talking with Jim Lee. Jim, thanks for squeezing me into your calendar and being my guest today.
Thanks for having me on the show. It's been my pleasure.
Well, you are welcome. We are going to have a great conversation around building financial independence passively, meaning you're not working for that money every month. And I can't wait to dive in deep with this, Jim. But before we get there, tell us, how in the world did you get to doing what you do today?
Sure. So I obtained my economics degree at UCLA back in 2010. As many of your viewers may know, that's right after the 2008 subprime mortgage crash, followed by the 2010 European debt crisis. So it was very difficult for me to find a job. I've been fortunate enough that to land an inside sales role working at LoopNet, CoStar. And for those that don't know what LoopNet is, it's basically Zillow for commercial real estate. If you type in any commercial property on Google, LoopNet shows up as the #1 search result. So started working there, and basically I was able to speak to real estate investors, agents, lenders, property managers on a daily basis. And I learned the importance of having multiple streams of income. So I started acquiring real estate for additional passive income. And eventually I built a sustainable real estate portfolio that I managed to break away from my W-2 job and started a career in real estate syndication. So now I'm a full-time real estate syndicator.
Okay. All right. So there's a word there we need to unpack a little bit. Real estate syndicator. What do you mean by that? Syndicate. What do you mean by that?
Yeah, so a real estate syndication is basically a partnership between investors who pool their resources into a single investment. This allows you to invest in multi-million-dollar properties like multifamily or any commercial buildings like office building, industrial. Syndication eliminates much of that risk while sharing in the upside. The property generates an income that will be split amongst investors. It's a win-win scenario. Syndication is basically just a fancy term. I'm pretty sure, like, to shoot a movie, for example, motion pictures, they need to syndicate this project, right? Because it requires a tremendous amount of capital in order to gather all the talents in the world and all the resources and tools, technology to be able to back up, shooting the movie, right? So that's syndication itself. The real estate development project, that's also syndication, right? It takes a tremendous amount of capital to do so.
Yeah. So I'm going to put it in my layman's terms, okay? Because here's the idea that came to me when you said it. So it's a group of investors that are pooling their money to purchase a property of some nature, multifamily property or something like that. And because they are co-owners in that property, they're going to share in the revenue.
Exactly.
So the idea that what hit me is a lot of times you'll hear like doctors who are all like, baby doctors. They deliver babies or whatever. And there are like 6 doctors, and they go together and they create a practice, and they buy a building, or they build a building. They're syndicating their money to do that building. That's the same concept. They're just putting all their money together to build this building, and that's their business. Conceptually, that's the same thing, except what you're allowing people to do is get involved with either like multifamilies or a big apartment complexes that might cost, I don't know, $10 million. I don't know. But you allow like business owners who can be investors to invest $50,000, $100,000 to have a share of that property. Am I getting it?
Yes, you are.
Okay.
It's the idea of being able to help others, not just for myself to reach financial freedom, but for my family, my friends, the ability to give back to, everyone who's been extremely supportive and helped me reach my goal. And in turn, I'm going to help them reach their goal.
Sure. Okay. All right. So who can do this? And so who can invest with you? Ballpark, how much is it? Do I have to have $800,000 to do it? And where are these properties? And do I have to like rent them out? Because I don't want to be a landlord, dude.
So to answer your last question first, when you invest in the syndication, you're passively investing in it. You're not going to be dealing with a day-to-day operation. Couple of great questions you asked earlier is who's able to invest. So for a syndicator to be able to take other people's money, we have to comply with the securities law. The security law states that your deal structure must fall either under 506B and 506C, and I'll get into that. 506B basically means you have to have pre-existing relationship with your investor.
Mhm.
However, when you structure the deal under 506B, you cannot advertise, and you can only take, I mean, you can take all kinds of investors, whether non-accredited or accredited.
Okay.
Now, 506C, you can only take accredited investors, but you can advertise the deal. Now, so let's go into what accredited investor means. Accredited investors means people who has a net worth of $1 million or who has made $200,000 in the past 2 years.
Okay.
So those are the two different types of structure you can do. To start off as a syndicator, most people do 506B because you're only able to raise, well, not only, but most likely you're going to be raising money from your family and friends at first, right?
Okay.
And you have pre-existing relationship, and they might not be accredited investors, and that's the situation I'm in, right? Yeah, so I think that's the questions
So
they asked, right?
it's really interesting because you kind of opened a light bulb there for me. The guys who do what you do, you can't advertise the property, but you can build relationships with people like me who might be somewhat interested in this. Is kind of, so we have conversations, we talk, we build a relationship, and you say, well, what do you want to do? And here are some properties I have. You're not advertising. Versus the other guy says, we have this, 1,800 unit apartment in wherever. That's what we would. That's one of the differences there. Is that fair?
Yeah, that's fair.
I'm just trying to bring it down to my level so I really understand what you're doing, because we business owners, we're a strange breed, as you know. We are really, really good at what we do individually.
Mhm.
But you get us outside of that, and we start understanding accredited investor syndication in apartment, and it's like, what? It's like understanding the IRS tax code, right? And so that's why I try to boil things down and say, okay, so what you're saying is another idea for syndication is very much like buying stock in a company, in a business. I become a part owner in that with thousands of other people. In a sense, it's kind of the same concept, a little different, right? But
it's very different, and I want to correct you on that, is
you
because when you buy a stock, right, you just get a piece of that company, but you really don't have a control or saying in what direction it is you're going.
right,
But when you invest in a syndication, you do have voting rights, and not only that, you also get the tax benefit behind that. When you buy a stock, you can only get tax benefit if you lose, right? If you sell at a loss. However, in syndication, you actually own a piece of that equity of that property. So all
okay,
that tax write-off goes passed down to you. The depreciation, the cost segregation, all that tax benefit gets passed down to you. And that's the beauty of syndication, is that in the business world, it works wonderfully if you are looking for, tax write-off and you invest in a syndication. All that will, you can offset that against your ordinary income or your capital gains if you are a real estate professional.
interesting.
So there's ways of, and that's why a lot of high net worth business owners, they tend to look in this direction when they invest money in a syndication.
Yeah, and you could syndicate, I assume, if you had enough money, into multiple properties, and
Mhm.
in each of those properties would give you a cash flow stream of income and differing depreciations and things based on all that stuff, right?
Mhm. Yes,
And
based on the
so,
percentage of how much equity you own.
sure. So that's how a business owner could invest in this and build your own real estate portfolio, without the headaches of being a landlord, right? Because y'all take care of that.
Yep,
Yeah,
that's
explain that a
exactly
little
right.
bit. That basically we would be investing, and then talk about what from the investor standpoint, what are the responsibilities, or what do I do, or do I just cash the checks?
Yeah, absolutely. So the most important part from a LP side, so there's a GP and LP, right? GP stands for general partner, and general partners are the ones who operates, who finds the deal, underwrites the deal, manages the deal, and then sells the deal.
Okay.
And then there's the LP, which is limited partner. They're the investors that come in with the money to invest passively into the deal.
Okay.
And what they do is they provide the capital for us to be able to close this deal. And then so we manage the deal on a day-to-day basis, and then we give you a quarterly updates on what's going on. Typically, our business model is we target value add apartment buildings, just like, to keep it simple terms, like kind of like fix and flips, right? Like
Okay.
flipping a house.
Sure.
So we add value to this apartment building. Once we increase the value of it, we increase the rent, and once we increase the income, then we can sell it for more. And we typically project 5 years hold period. Once we acquire these 100+ unit apartment building, we hold it for 5 years, add value over time, and we're confident that we can 2x your money back at the end of 5 years. Yeah, it's a long waiting game, but this is how you build wealth through real estate, right? It's
Right.
reasonable, it's conservative measure. We're confident in 5 years that we can 2x your money. If you put in 100,000, you get 200,000 back. So that's the upside. Now, the beauty about syndication is not only does it provide you upside, but you also get cash flow. So you'll get 8% cash on cash return, meaning if you invest 100,000, you'll get roughly 8,000 mailbox money. So that comes out to be $600 to $700 per month. So that's the overall package. So you're looking at roughly 28% annualized return over a 5 year, a span of 5 year time frame. Does that make sense?
Plus, well, it does. My brain's going, what? Plus the tax savings, right?
Yes.
And all of that. And ideally, I would guess an investor would do that in 5 years. Let's say you sell, I get the money. I would want to say, boy, that was a good deal. You got another one? And I would continue to roll the money back in because it's passive income, but it's also appreciation plus tax savings. Okay. Wow. That's
no
crazy.
brainer, right?
Well,
No brainer.
I'm sitting here going, okay, where's the downside here? That's why I wanted you on the show, because it's a different model than what most people. I mean, we talk with people all the time about real estate, buying real estate, being a property owner, building a portfolio, all of that stuff. This is a different twist on it, that I'm an investor. And I think that's maybe the mindset difference is I don't want to own real estate that I have to manage or have a property man. I just want to be an investor, kind of like, I mean, another bad analogy, but I'm going to start a 401k program. I've got $100,000. I'm going to put it in a 401k. Well, I'm going to let it sit there for 10 or 15 years to grow and all that stuff. And I've got to watch the markets and all that. Or I could take that 100k and work with Jim and be part of a syndication and everybody knows real estate grows over time, right? It's pretty safe, has its dips once in a while, but if you stay the course. So it's a part of your investment portfolio is being able to invest in real estate without the headaches. I'm sorry, I'm just going to say it. That's what keeps me from investing in real estate, is just the potential headaches and the time that it takes to go search for the properties and the negotiation and the rent and the tenants. And so you're telling me, Jim, that you kind of eliminate all of that, because I'm not a landlord, I'm an investor. Is that fair?
Yes, absolutely. Leave it to the experts, right? Leave it to the expert. We're the one who are going out there to do the due diligence, check out the property, check out if there's value add component, if the operation is not as great, that we, once we take over the project, we can add tremendous value and be able to increase the value of the property. Leave it to us to, search those areas, look for the great markets, to invest in, while you guys do what you do best, right? Because you're just like you said, as a business owner, you guys are making a lot of money by doing what you do best, and you should focus your time and energy on that while passively, invest, use your money to make more money, right? In a sense. So you don't have to worry about that.
Having your money work for you, generating more streams of income. So potentially, let me just throw this out there, hypothetical, somebody comes to you and they invest, whatever, and they have, let's say they invest in 3 deals with you. So now they've got, and let's just say each deal is $500 a month, passive income to that investor. Right? I'm just making numbers up. Well, now I've got $1,500 a month coming in, month in, month out, that I don't do anything. Let's say the economy in my business takes a slump. Well, but it's okay, because I got $1,500 a month coming in, and I've got an appreciating asset and all of that. So it's a way not only to save for retirement and to build portfolio, but to mitigate sometimes an economic downturn in your industry, and at the same time build wealth for yourself, college education, whatever it is. without the headaches of real estate. I guess that's the thing I keep coming back to, because as I talk to people, real estate's like a love-hate thing. My CPA invests in real estate all the time. He loves it. He eats it, breathes it. I mean, every time he talks to me about it, I get sick and I go throw up. I'm like, I don't want anything to do with it. But you're kind of opening this new window to go, well, there's a third option in a sense called syndication. You can be a real estate investor, a passive investor. Did any of that just make sense?
It makes total sense. It makes total sense. And I like to share my side of the story exactly on just to touch up on what you just said. I started my career working at LoopNet. I understood real estate from early on. And when I got laid off job after job from my W-2 job, I realized I can't depend and rely on my fixed salary. I had to create some kind of additional passive income so that, if I hit a roadblock, like you just said, when I get laid off, where am I going to turn to? I have to create something for myself. And that's why I started to invest in real estate. Now, after acquiring my first 2-bedroom, 1-bathroom condo, I realized, I was very actively involved because I did everything from A to Z, everything you listed. I, ran the background check on the tenant. I went out to, did the maintenance myself to cut costs, everything you could probably imagine. I did it all. And I realized I don't want to be that actively involved. There's so much headache. So that's when I started to get smarter and started to educate myself, started reading and started to systematize everything, automate things and hire property managers, delegate tasks to find experts to help me, have a list of contractors, right? And that's when I realized, wait a second, if I'm doing this already on one condo, why can't I scale it? Why can't I just go for the bigger deals, like 100+ units? It's a lot easier to scale that way. You can have an on-site manager manage 100+ units. You only have to deal with 3 roofs instead of 100 roofs. The scalability is just, it's so much easier, right? And also, you're also able to attract more sophisticated people to work with you, property managers, lenders, agents. They've been in the market for 20+ years. That's how they're able to sell these 100+ unit apartment buildings. So going back to what you're saying, that's why I got into syndication. It's for that reason. It's that, I realized, okay, I went through this as a real estate investor and all the headaches. And I'm creating something that if people invest in a syndication, they don't have to go through what I had to go through.
Right. I love it. I've got this vision in my head, avoiding the real estate migraine, right? Because it just causes a migraine just to even think about all of the stuff that you have to do to invest in real estate and be a real estate investor. And what Jim is telling you, you don't need any of that. He's got the aspirin for you because he's got a way for you to syndicate, to invest in real estate, to be an investor, build your own real estate portfolio with others and build wealth passively. And that's really interesting. We could probably talk for another hour, Jim, because I got all kinds of questions, and I'm sure my audience does too, but where do they get more information about you or about this? Because this is probably scratching the surface and scratching the itch for some people going, this is like too good to be true. I need more information. I need to build a relationship with Jim. I need to find out more. Where would they go?
Yeah, they can check all the stuff out on my website, formosainvesting.com. And I also wrote a short 20-pager ebook. It kind of walks you through everything we discussed, but more in detail of how I transitioned from being, a W-2 employee to being a realtor, and then to finally become a syndicator, and all the mistakes I've made through my journey, so you don't have to make them. They can also view my social media links: Facebook, Instagram, LinkedIn at Formosa Investing.
Okay, excellent. I'm going to have that in the show notes, because people are out, exercising, working, driving, walking the dog, whatever. But formosainvesting.com is the website. I'll capture that in the show notes with other links. And it's just intriguing, Jim, what you do, opening up the opportunity to be a real estate investor without really taking my time away from my business. And that's the other aspect we didn't even touch on, is the time savings you bring to being an investor, because you're doing all the due diligence, you're doing everything. And I think that's cool, because as business owners, we got to stay focused on what we do. That's where we generate the revenue and the profits that we can invest now. And so you're just giving us another opportunity of, you can invest in real estate. You can do it passively, create streams of income, get the appreciation, tax savings, all of that. Reach out to Jim, formosainvesting.com, and learn how you can build financial independence passively by joining one of his real estate syndication opportunities as an investor, if it's right. So Jim, thank you, man. This has been really, really cool.
Thank you for having me on the show. It's been my pleasure.